Welcome to the Tiny Box Dialogues. This series was created to share the knowledge of our experts using real examples from real people with real stories. Before we get started, please note any information given on this dialogue is not investment advice. It is for education and entertainment purposes only. Welcome to the Tiny Box Dialogue special series on Bitcoin Part 2, where we are continuing our conversation with Tank. Now, Tank started his journey as a freelance software engineer focused on full stack web development, security, and cryptography. Moving into the world of Bitcoin, he has been a technical lead for the development of the cross-platform Bitcoin and Lightning Network, which we're going to get into today. Last week, we discussed the fundamentals of Bitcoin, the history, the technology, and we touched on how Bitcoin could potentially bring economic freedom to people in the world. This week, we want to explore other cryptocurrencies. Now, one thing I admire about you, Tank, is your commitment to integrity. You want people to understand the story and the technology before investing. Can you give us a quick recap on last week and why that is?
Oh, thank you for the kind introduction. It's only downhill from here. So, well, to give a recap, basically we discussed, what are the fundamentals of Bitcoin, and what makes it an attractive savings vehicle, why is it relevant? And I think we touched very briefly at the end, somebody asked about altcoins and other currencies, which we're going to get into today. So I hope we're going to answer some of those questions.
And we'll have a little fun while we do it. I'm going to start right from the beginning. I'm going to start with the basics. What the heck are altcoins? Because there's a lot of lingo that we discussed today that I know I'm not up on. So what's an altcoin? Why don't we define it first?
Yeah, so Bitcoin launched, so the white paper was there in 2008, and the software launched in 2009. And back then it didn't have any value. Like Bitcoin were literally being given away on websites. These were called faucets. Yeah. And the developers were basically saying, you please take some, use them, and play around with them, more like collectibles. They really only gained a market value. I think it was 2008. This guy named Laszlo bought 2 pizzas with it. It was like, I think 11,000 Bitcoin or something. And which is like now millions of dollars worth, right, for 2 pizzas. And
was it worth it? That pizza better have been good.
Yeah, so this made the guy kind of a legend, right? Because he's known as Bitcoin Pizza guy, and that day in May is actually now celebrated by Bitcoiners around the world as Bitcoin Pizza Day.
Really?
So I would like see pictures of my colleagues, posting that they're in San Francisco getting 2 pizzas, and that's how you have to imagine, like, okay, this thing was like a complete experiment, and then all of a sudden it got value, and it was launched in a very fair and open way. Satoshi said, there's no pre-mine, I'm gonna launch it and anybody can join the network, and it was basically being handed out and given away, and kind of that way the currency distributed quite evenly. And then once it gained some market value, you have to imagine, like, this is going from like 0 to a few cents for some pizzas, and then 2013 is going up to like $1,000. So there's this big bubble. Mm-hmm. And in that rise, a lot of people came into the space. In the beginning it was like cypherpunks. They had values around, they said, okay, we need a private currency that governments can't debase in order to strengthen democracy. Mm-hmm. Their thesis was, we can't have democracy without privacy in the digital age. So they were very much pro-democracy, and then all these different political and financial interests came into the space. A lot of libertarians, a lot of also left-leaning people, a lot of venture capitalists. So all these different movements came in, and also money came in, right? And then with the money, the market value of Bitcoin rose, the network effect rose, and then all these other people were saying, well, Bitcoin is, it's slow, it's expensive, it's hard to use. We're going to make a better one. Okay. We're going to make one that has smart contracts. That's how Ethereum started. We're going to make one with Doge memes. That's how Dogecoin got started, right?
Yeah.
And it was a lot of like, it seemed like there was a lot of fun being had on the internet. But slowly but surely, this whole ecosystem over the last 13 years has evolved into this quite mature ecosystem, which the market cap is around $2 trillion, right? Which is in macroeconomic terms quite relevant. I think the bond market is around $100 trillion or 200 trillion. Don't quote me on that. But like, this is like basically 1% of the world, like the sovereign bond market, right? So it's not nothing. And obviously,
and people wanted a piece of the pie, right? That's really what it comes down to.
Yes, and everybody's like, well, I didn't get into Bitcoin early enough, so we're going to launch this other thing, right? And then like, we'll just buy it at 2 cents again. So there's a I think they're both by the people that launch these networks, and also by the people that are kind of come new into the space. There is a tendency to not want to spend so much on the Bitcoin, which is seen as expensive and slow and old, versus, I don't know, buying Dogecoin for a few cents, right?
Yeah.
So
I mean, there's also risk that goes along with that, which I'm sure we'll get into. I guess my question then would be like, is there a positive side to it? Because it does seem like it was just a whole bunch of people that said, oh, I'm too late for Bitcoin, so we'll create our own, you know, and clearly that's not working quite the same way. But what's the positive side of altcoins coming up? Is there a positive side?
Well, I mean, so I'm not like, I'm not super religious about any particular thing. The way I see it, Bitcoin was basically, it invented digital scarcity, right? So that's a fundamentally new thing, which is, I see it in terms of like our development. It's similar, like, you know, the invention of electricity or the printing press or the internet. It is, I think it is that fundamental and important, because in a digital age, we need to be able to store value, and we need to be able to take it with you when we move. And the fact that there's digital scarcity is a new thing, and that's amazing, and it's really useful. And also, there is a temptation to then try to create digital scarcity again, right? But the thing is, you can only really create it once. And the network that has the biggest network effect, the most participants, we talked about this last time a little bit, like the English language, right? That one usually wins out. Yeah. So that's the main thesis from like the Bitcoin maximalists, who say there's only Bitcoin. That's the only one that really counts. And then there's these other projects like Ethereum is the biggest one. They're saying, wait a minute, we need to keep an open mind here. We need to see that Bitcoin is very secure. Yes, it's very, very robust. So it's a great digital gold asset-like thing to have a foundation and a reserve asset. But we all have all these other use cases, like smart contracts, like decentralized finance, like NFTs, like Web3. There's all these buzzwords going around. And while I acknowledge it's great that there's innovation, it's great that there's experimentation, it also comes with a lot of lofty promises and scams, quite frankly. I mean, we do have to acknowledge there's about 7,000 digital currencies now, and most of them are not gonna like hang, like, you know, most of them are not gonna be any of value, right? We saw this in the 2017 bubble with the ICOs. Most of these coins are now at zero or close to zero. And yeah, I would say, and you asked this before, like if you're buying these, you're not really buying a currency. Like I see like Bitcoin as kind of cash. You're basically buying digital cash. And when you're investing into these other assets, it's more like you're playing like a venture capitalist, right? So you're making bets on technologies that they might be relevant in the future, but these are bets. So that's how I would see them. And you're basically betting that the Ethereum network will accrue some value, or the Ethereum token will accrue value because the Ethereum network has utility. Like, for instance, decentralized finance. A lot of people think, and I tend to agree, that like the stock market that we have today, the infrastructure that runs that, it's, you know, it only runs basically during working hours on the weekdays, not on weekends and holidays. And it's actually settled only at very not in real time like the Bitcoin blockchain does. So I actually do think sooner or later we will have security tokens that you will have to register with the SEC, like in order to buy Apple stock on one of these technologies. I don't think that's unthinkable. I think that might happen. The question is that going to happen on Ethereum? Is that going to happen on Solana? Is that going to happen on Cardano? Yeah. Like nobody knows. Or is it just going to happen maybe on Bitcoin? Because there's the Liquid network, which allows for these tokenized securities to exist as well. And if you're buying these tokens, you're basically speculating on the fact that there's going to be utility and you're basically, so there's all sorts of assumptions that people make. And a lot of these, I would say, you have to be really careful about who you listen to online, because a lot of these people are basically just pumping their own bags, you know? You know, that's why I would be very careful what you read on the internet. You know, this guy listened to Elon Musk, he put his life savings into Dogecoin, and now his wife is leaving him because Dogecoin crashed, right? Yeah. So this, like, you know, this isn't, you know, this people's livelihoods, yeah.
Be educated. You've touched on so many topics there. So I do want to ask you a couple of direct questions about things like Ethereum and NFTs. But first, I wanted to talk about the security, because altcoin has a lower number of participants. And I read somewhere that that means it's got lower security. So it ends up acting like a fiat currency. And Ethereum, like you said, the second most traded in the world, I heard recently they are very similar to a fiat currency because decisions of a few impact the masses. Is that true?
Yes, so that's the big, and this is where it gets very technical. And for the layman, for like the newcomer coming into the space, it's really hard to understand this. The way that Bitcoin development works, there's no single entity making decisions, right? Satoshi actually went away. So we don't actually know, we haven't heard of Satoshi in years. And this is great. This is actually a feature, not a bug, because there's no like leader in charge. So you have these open source developers, and they're making these suggestions of how we could enhance the protocol. And then users like you and I decide, okay, do we want to install that upgrade or do we not? And this is how consensus gets created. And it's kind of like a very decentralized process, right? So we're all egalitarian participants in this network. And depending on if we want to install that software update, it will be deployed across the network, right? Because only when there's broad consensus among the participants will that software feature be used. The way that the Ethereum network works, actually, those decisions get made by the Ethereum Foundation. And they basically roll out software updates regularly that are actually breaking. And this forces a lot of these participants to upgrade. So it's not like they could choose. They're basically, well, if you don't install this, you're going to get left behind. And then you're going to be on this other fork of the network, which won't accrue in value potentially, which will be a lot of risk to your business. So for the Ethereum network, there is actually, the way I like to explain it, you know, fiat currencies, at least we have a democratically elected system, which is then, you know, obviously there's bureaucrats at the central banks that are running these, but at least there's somewhat embedded into the democratic system, right? And then these bureaucrats that kind of get put in power are in charge of monetary policy. And this is how I would kind of, you know, it's kind of like, but with the Ethereum Foundation, it's kind of similar, right? But they're not democratically elected. They're just some people. They're like
that created
people.
It.
Yeah, that actually have the most tokens. Like they hold. There's a 70% pre-mine of Ethereum. So before it was launched, 70% of the tokens were given out to stakeholders of like Ethereum themselves. They were just auctioned off, and there were also venture capitalists that came in. So 70% of those tokens, we actually don't know who owns them right now. They're very centralized, and the way that this system works, they're planning to move to proof of stake. So not only is the development and the rollout of upgrades centralized in decision making, also once they move to proof of stake, which is a different system than the proof of work mining that also Bitcoin uses, it basically means the rich people become richer because they're going to get the staking rewards, and they also get the say. They get to make the decisions. So not only are there like basically the VC is going to be in charge of our monetary policy, they're also going to keep getting richer. So it's basically the rich get richer on steroids. So and that's why it is actually from its values completely different than Bitcoin, which tries to say, hey, we're all egalitarian. Doesn't matter if you have $5 in Bitcoin or you have $5 million in Bitcoin, or you're Elon Musk, or you're, you know, whoever you are, your node is exactly equal to everybody else's node. And this isn't the way it works in Ethereum or these other networks. Ethereum is you could argue it's a little bit decentralized still, but like Solana or these other ones are actually more centralized. So the kind of the farther down you go the list of altcoins, the more centralized projects these are, where the SEC is actually looking into these and checking if they're not actually securities, right? They're unregistered, unlicensed securities, and Ripple actually has been sued by the SEC because they look very much like a company's security, right? And a lot of these consumers which are coming into the space and buying this stuff, they don't really know what they're getting into. They don't know the risks, and a lot of them get burned. So this is why, I mean, I personally think, yes, the experimentation is great. The technology is really fascinating. But if that's where all it were, that'd be cool. But it's actually, there's a lot of misleading marketing that goes along with these projects where a lot of people lose a lot of money. So that's why I would like that's why it's really important to educate yourself, to learn about this stuff before you make any investments, before you do anything, even Bitcoin. Always make sure you understand what you buy. Like same thing with real estate or stocks or whatever, right? Just always make sure you educate yourself. And once you feel comfortable, dip your toe in, maybe, get acquainted with it. And the larger your portfolio allocation becomes, the more you should invest into education, right? Your portfolio allocation should always represent your level of education in the asset. It doesn't matter if it's cryptocurrencies or anything else.
I love that. And we're going to dig deeper into that next week as well. You touched on a couple of things there. I am laughing to myself because the Ethereum description is basically like starting your own business and then calling yourself a CEO when you're the only person in it, right? So it kind of made me laugh a little bit. But you mentioned venture capitalists, and of course they have the money to invest and burn, but we're talking individuals investing in Bitcoin. And if we're looking at like venture capitalists, the rule of thumb is if you invest in 10 startups, 3 to 4 fail completely, 3 to 4 return your investment, and 1 or 2 produce substantial returns. If we look at that in the case of altcoins, so you're really gambling because it's a 10 to 20% chance that you might make some money on altcoin, right? So is there any, like you gave me a description once about its working capital. Could you describe that a little bit to our audience?
Yeah, that's how I like to see these things as a metaphor, so I basically see Bitcoin as it's a store of value. It's a hard asset, kind of like gold or real estate, or like digital cash. Like that's where I can put money under the mattress, for later. I don't really, definitely it's still, if you look at it in terms of humanity scale, it's been around for 13 years. So it's not run like 5,000 years of gold, right? Yeah. So it doesn't have the track record and the trust yet. But I would argue it is a lot more robust and secure than a lot of these other projects, and which I see most like utilities, right? So if you're buying Ethereum or Ether or Cardano or like all these other tokens, you're kind of making an assumption that there's utility there. So it's kind of like working capital, right? So you're basically saying, all right, I'm going to buy some water, put it in a tank and put it like, next to my fridge. And I'm going to put some food into the fridge because that's all working capital, right? Yeah. Because there's utility in having food in the fridge. There's utility in having water in the tank. But you don't store your water. You don't use water as your store of value. You don't use food as your store of value because food's going to get bad over time. That's why you want to store your value in a hard store of value. And not in these working capital things. And I think this is how I would actually, there's a great paper that was written by John Pfeffer about this. he invested into Lightning Labs. He was really thoughtful about his analysis of this kind of like working capital versus hard asset store of value. And this is why Bitcoin is actually fundamentally different. Even though like coming into the space as a newcomer, it's really hard to see the difference.
Yeah, there's a lot to learn, there's a lot to know, but I like the fact that you say that you should be exponentially learning as you're growing your portfolio. So that's fantastic. Good advice, very good advice for our audience. I think there's also, you did mention that there is a good side. Like, I mean, we've talked a lot about altcoins, and Bitcoin is clearly a front runner in security and value and scarcity, et cetera. But you talked about US dollar stable coins. Now, I've never heard of those before. I mean, we heard a lot of buzz about NFTs and, you know, Ethereum, et cetera. But what are USD stable coins?
So
And what makes them different or more positive, I guess?
Yeah, so I personally, what I love about Bitcoin, it's just like this open financial system, and anybody, you know, in the developing market doesn't need to register at a bank. They could just like buy Bitcoin on the street, basically, exchange it peer to peer, and it makes it very inclusive and open. But a lot of people are, you know, they're living paycheck to paycheck, and they don't necessarily want to have that volatility.
Mm-hmm.
So they would rather have a token that is actually pegged to the US dollar, and which is basically 1-to-1 in terms of value with the US dollar, but they don't need to sign up to a bank account. They actually can use a mobile wallet and send these dollars peer to peer. This is what stable coins are, like Tether, like USD coin from Circle. So these assets are actually pretty big, and like I think 60 billion, 50 billion of market cap now. And these are being used in developing markets for people that don't have access to bank accounts. I think Myanmar actually just made Tether the official currency, because yes, and I know that some countries are using this that are kind of outside of the banking system, or in Asia, a lot of people are using it to get around financial restrictions.
Yeah.
Because you know, having access to US dollars is really good because it's the world reserve currency. But like, you don't need to stomach the volatility of Bitcoin. And this is the one thing I would say, this is a great utility because it makes actually the US dollar accessible to people that are in these dollarized markets, which might not have access to the dollar otherwise, right? So this is where I do see a value. And some of these stable coins, they're actually running on multiple blockchains. So there's one, there's the Liquid sidechain, which actually is pegged to Bitcoin, and there's Tether, is the US. This is the biggest US dollar stable coin, is able to be transacted on the Liquid network. So this basically runs on the Bitcoin technology. But Tether also is available on Ethereum, on Tron, on, you know, I think also Solana. So on multiple blockchains. And that's the cool thing. It's basically these, depending on where the fees are the lowest, and this is why I say it's a bet to assume which one's going to be the one where all this is going to happen, because depending on where the fees are the lowest, the user's just going to transact there, right? Because Ethereum fees have been like $100 around this year. So if you're doing like a $50 stablecoin transaction, you don't want to pay $100. So you'll just go to Tron or whatever blockchain, right?
Yeah. So that brings us to the Lightning Network, because then the Lightning Network actually, it helps you make those transactions, right? But for lower cost. So why don't we dig into that a little bit? You know, we've got a little bit of time. Tell us about what is the Lightning Network and how does that help us with state of transactions? And I read somewhere it's about layers. So explain that.
Yeah. So you know how like the internet is the technology stack is split into layers like TCP/IP, right? And then like you have an application layer, HTTP, which is what you see in your browser. So this is how usually robust systems are scaled and are developed over time, is with layering. And the Lightning Network is a layer that sits on top of the Bitcoin blockchain. So the Bitcoin blockchain is basically used as a settlement layer, kind of like the Fedwire system. Yeah. So big, expensive transactions are done over this, but small transactions, like for instance, buying a coffee for 0 fees, can be done on the Lightning Network, right? Wow. And El Salvador, El Salvador is a really small country in Latin America. They have made Bitcoin legal tender, and they have actually integrated Lightning. So at Starbucks and at McDonald's in El Salvador, you can buy your coffee with Bitcoin over the Lightning Network for 0 fees.
Love it.
And it's really awesome because it's like seeing this rolled out and people actually using it, and not just, it's not vaporware, it's not a hype, it's really powerful. And I actually see Lightning not only being a competitor to Visa in terms of payments, once Bitcoin gets adopted more as a currency in actual daily use versus just a speculative asset. I also see Lightning replacing the SWIFT system, because not every country loves the US dollar. Like if you're Russia or China, you might not want to settle your energy markets in dollars. You actually, Iran is actually under sanctions from the US, so they have adopted Bitcoin for export and import.
Mm-hmm.
And as right now the fees on chain on Bitcoin are quite low, but as the adoption goes up, more transactions will happen on the Lightning Network, where the fees are very, very low. Yeah. And I actually foresee very large trades, and between banks, that final settlement is being done on chain, on the Bitcoin blockchain. But like day-to-day transactions between you and me, maybe I'm going to a merchant buying coffee, those will all happen on the Lightning Network.
The fact is that it really benefits businesses as well, because I know that there's many businesses that don't even use credit card transactions because the fees of using a credit card are so high that they would prefer that you just go direct with debit card or cash. And that's really interesting too, right? So this would eliminate that entire issue for a lot of small business, I would imagine.
Oh, totally. I mean, we don't see the Visa fees, but every time you're buying something on Amazon or at the coffee shop, you're like, the merchant pays 3 to 4%, right? So that's a big part of their profit margin, which they're basically giving to Visa. And that's in Europe, in developed countries like the US or Europe. In Latin America, they're paying up to 8% fees. Like imagine if you're a restaurant and you basically have the choice of getting paid in cash, which is great, but more and more people are going cashless now also because of COVID and whatever.
Yeah, of course.
And then your margins are just reduced because more people are just paying with Visa. And with Lightning, you pay almost nothing, right? It's a fraction of a cent, if even, because it really scales very well.
Yeah.
And obviously, the Bitcoin currency itself is still very volatile. That's why it's not being used as a medium exchange yet. But I would say in 10 to 20 years, I can really imagine myself, I'm getting in a plane, I'm flying to Bali, I have my Bitcoin as kind of like my international currency, and I can go to the coffee shop and just buy a Bitcoin or euros or dollars, but they're probably gonna give me rewards if I pay in Bitcoin, because then I don't have to pay the 3 or 4% Visa fee, right?
Yeah, that's it.
That's how, yeah.
Mm-hmm. I mean, as you know, I've lived in 3 different countries, and just having to manage the money switching place and the foreign exchange and the transaction fees, it makes me just want to do it through Bitcoin. Why not? Save myself some money, save other people some money, and the banks aren't taking it all.
Exactly.
Listen, there was one last thing that I was going to ask you. It was around, you said something about transactions and replacing Western Union, and I thought that was a really interesting analogy. So I want you to tell that story before we drop off. There was also another story about Twitter that I wanted you to share, reputation exits, because I've never heard of that before. And that's very linked to altcoin, isn't it?
What was the first one again?
Sorry, first one was about just a second, I have it written down. It was about, let's do the Twitter one first. Let's talk about that story first. I wanted to talk about the reputation exit and the risks that you're seeing people having to endure, because you've told me so many great stories, and that one's a really good one.
Oh, I think the first one was around remittances in Western Union.
That's it. Yes.
That's actually the exciting one, because like in El Salvador, I think,
okay, let's do that.
25%, don't quote me on this, I'm not sure if the number is correct, but I think a large part of the GDP of the country is remittances, because a lot of people are seeking opportunity elsewhere. For instance, a lot of people move from El Salvador to the US, and then they send money home, right, to their families. And I think around 25% of the country's GDP is remittances. That means basically money being sent home. Mm-hmm. And because Western Union takes really high fees, so like around 10% or something, right? A lot of these people, which are usually like the least off in our society, right? The ones that are the most vulnerable are paying such high fees. They're
They
basically
leave their family to make money to send back to their
Yeah.
families. Yeah, they're kind of vulnerable. Yeah.
and then they get murdered on fees. So yeah, so the cool thing is these people are now using Bitcoin and Lightning, right, to basically send money home for free. And it's awesome because the El Salvadorian government has actually put thousands of Bitcoin ATMs in the country. So more people have Bitcoin wallets are signed up to the Chivo wallet than actually banks in El Salvador. So all you have to do is, if you get money via the Lightning network on your mobile phone, you just go to one of these ATMs from the government and you get dollars for your Bitcoin.
Amazing.
And it's really cool because it really makes it kind of banks these unbanked, and it makes things a lot cheaper and more efficient for these populations which have not been able to participate. So I love that as a Bitcoiner. That really gets me excited about the technology.
I can also see the pushback coming from Western Union because they know that they're going to go out of business the more the Bitcoin and the Lightning Network gets to be known. That's
Honestly,
all we have time for, but we're going to discuss way more next week. And next week, I don't think I'm going to put a time limit on us. We just keep talking until we're done. But thank you so much. Why Bitcoin is the most inclusive system in the world is the thing that I love about your story, is that people really care about making sure it is inclusive. And this also indicates to us that cryptocurrencies are not created equal. I'm just going to recap by saying digital scarcity is a one-time invention. This is for our audience. So there is no second best, and everything that comes after Bitcoin is just not scarce. Now, this is something I heard on The Great Reset. So if you're looking for more information, that's a great documentary to watch. Otherwise, join us next week. Next week, we will be talking about how to make informed decisions and maximize investing in Bitcoin. So thanks for joining. This video will be shared on YouTube and audio on Spotify tomorrow. Thank you, Tank. And we'll see you next week.
Thank you.
Bye.